Alrighty, let's go ahead and get started. Welcome everyone to the HUBB Live Trading Room. If you are just joining us for the Evo Trader Live, great to see you again. If you're joining us for the first time today, welcome. Great to have you with us for this holiday session, last webinar before the end of the year. And we wish everyone happy holidays going into this holiday season, and looking forward to everything that 2025 has to bring. First and foremost, as always, we have to cover our disclosure disclaimer agreement. If you've attended any of our live webinars, you've seen this. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Always available to be read in full detail at your leisure on our website. But without further ado, let's go ahead and get right into it. I believe Rob's out there, and we had some talks about the Santa Claus rally, the potential of that rather, as we near the end of the year and Christmas Day. So, Rob, I'll pass back over to you.
Thank you, Zach. Hey, everybody. Welcome to the HUBB Live Trading Room, where we talk about all things AI associated with the HUBB platform. I wanted to take a look at the markets real quick, so switch the screen over and just give you a quick update for those of you that were with us during the Evo Trader Live. We were wondering how the market was going to end the day. We had a little bit of a move down where we had the potential for a 5-wave to the downside. So I thought I would go ahead and show you that and see how things have changed. So notice that we did turn and move back to the upside. Was talking about if we did bounce and got above that level, then we would have a disqualified downward 5-wave pattern. And that's exactly what happened. We turned, went back to the upside. Now we have an upward 5-wave pattern. Just getting off the AI subject for a minute, just talking about general Elliott Wave comments. This is one of the things that people that will say negative, the naysayers against Elliott Wave will talk about how, well, the charts relabel. And it's important to point out that's a good thing. The markets are not static. The markets are dynamic. They're constantly moving. They're ever moving, ever changing. And if you don't have an indicator that's quick to change with the markets, you're going to be left behind. If your indicators are slow to respond, then you're going to be behind on trades, et cetera, losing money on a lot of trades while your indicators get back in line with what's going on in the market. You need an indicator that is quick to respond. And that's why I like Elliott Wave, because if the pattern changes, it immediately will relabel it. So if you were looking for a potential downward move, you should have been waiting to see if that continued. And then if it broke past that previous level that was setting up for the wave 4 to go down, if it broke above that, then the pattern was disqualified. So immediately you would have seen that it disqualified. You can see the wave 3 just moved over. So we just hit a new high for the day as the market continues to do this drift up in the second half of the trading day, if you will. And so you would have maybe had a small loss on the first trade if you were trading intraday, and then a nice gain following through that. And that's all you can ask for in an indicator. So it's Elliott Wave. You're seeing why we use it, and I love the live feature on the Elliott Wave charts in this platform. So hopefully you're enjoying that as well. So now the only question is, can we get back above the 10-day moving average? Can we get back above that lower trend line? Even though we've had a bit of a rally since 11 o'clock, we haven't really accomplished anything, if you will, other than the market moving up a little bit. From a technical standpoint, we need to get back above the 10-day moving average. We need to prohibit this 1030 cross, and we need to be back above that lower trend line. All right, so that pretty much everything we can talk about the market today. Let's start looking at the AI signals and what the AI may be telling us about a potential Santa Claus rally. Well, when we look at last night's results, nothing on the bullish side. If we look at the bearish side, we do have one, EXPD. Couple problems here. One, it's only a 65 score, which I've been itching to do, and the data scientists have encouraged me not to do that. But I've found that they've worked pretty well. But the problem here, and you can see it would be working today, but the problem is we're too far to the downside and we're too close to the downside target. So if we do get a bit of a bounce back up towards the 10-day moving average, I'm going to keep an eye on this one. There's not a lot of liquidity, but there's one strike that we could potentially do over 100 contracts. But other than that, not a whole lot. But if we do get a bounce back up here towards 115, that would make it interesting. But as I mentioned, the oversold conditions can last a little bit longer than overbought. So I wouldn't be surprised if we just went right straight down to that target there at 108. And then that was it. So $2 move out of a $110 stock, not enough to put money at risk in an options trade. So we will keep an eye on it. And if it gives us an entry, I may consider it, even though the score is only 65. But isn't it interesting that zero bullish scores? And, with the correction, that's not that surprising. But look at all these bearish signals that we still have. And some of the scores, several of them, with scores of 60 or above. So we're kind of leaning towards that bearish side of things a little bit on the AI. We do have one down here. I think an interesting one to look at is Micron right here. Anything below 25 is something that you could fade according to the data scientists, and this is right at 25, so just barely there, which to me that's not enough in order to trade it back to the upside. So we had the downward move, we've had a little bit of a bounce, and just feel like perhaps that's not one that we would want to fade and expect it to turn and go back to the upside. Remember, we're on the bearish side. So I want to highlight this, that I talked about it last week, but then when we sent out some of the bearish alerts, support and accounts services were telling me that a few people had just gotten so used to buying calls on the alerts that went out that they bought calls instead of puts on the downward move. But if you remember last week, I was showing you that, remember now on these bearish signals, we're looking at puts. We're over here on the right side of the options chain. So we want to make sure to look at put options available. And that's just an important thing to remember. And, we all learn from our mistakes, but I can understand it. I posted commentary. I'm a creature of habit. And for since inception, September of 23, the only bearish trade we had put on was fading a very low score on the bullish search. We bought puts then, but then when we're buying puts on these bearish signals, we just have to make sure. So when the alert comes out, make sure you look to see, is it a long call or a long put? Especially when I think we're going to be getting more volatility next year. I think we're going to have a good mixture. I think we're going to have a mixture of bullish trades and a mixture of bearish trades. So it's going to be ever important to make sure that you're using the correct options, whether it be a call or a put, when we send out those alerts. So I did want to show you Micron, and just not enough there, but quite interesting with the big drop that it had following its earnings report. Perhaps it does drift down a little bit, but with a score of 25, the AI is not convinced of that. I just wish the score had been a little bit lower, and then maybe we would consider fading it. But at this point, not so much. So talked about EXPD. Here's another one. And the reason I wanted to show you this is these make me nervous when you see these names here. Like this is the ProShares Ultra Short. And when you see these ultras, or you see the ETFs that are 2 times or 3 times the movement, understand that to create that leverage, where you're getting more bang for your buck, if you will, on a directional move, they use futures contracts to create that additional leverage. So you have options that have leverage, and then you have futures that have leverage, and both are dealing with time decay. So you get a double whammy on time decay. These work if you're right in a very short period of time. When we look at our AI signals, we've had plenty that have been really quick, 1 to 3 days, lots of them. But we've had some that took their time. And if you're trading something like this, and it's one of those that maybe takes its time to go hit its target, you're going to get eaten alive with time decay in the option. So, it's everybody has their own risk tolerance. If these are things that you're interested in and trading, etc., then more power to you. But just understand that we're always talking about options, and with the world of options trading, you not only have to be right on direction, you have to be right on direction within a given time frame. And when you trade these ultras, or 2 times or 3 times bullish or bearish, you have to be right in even a shorter period of time. So a lot of pressure on timing in those. But I'm not going to argue that they work well if you get the timing right in a very short period of time. So that would be interesting there. But if it was a little bit of a higher score, maybe we might do something like that in the AI portfolio, um, especially to the downside. And I can tell you that on these ultras, I would be more interested in doing those to the downside than the upside. And you know why? Because markets tend to move down faster than they move up. So let's go back a couple days on the calendar and see what that might be showing us. We go back, and on the bearish side, we can see that we have a few here. HR, Healthcare Realty Trust. I hate these REITs. They tend to move slow as well. But the problem here is there's not enough of a move. So at 1685, and it's pretty much flat on the day. The target's only 50 cents away, so obviously we can't do anything with that, even though we did have a pretty high score. Makes you wonder if that's giving some sort of a commentary on the housing market in general. As rates continue to tick up, which we featured in the EWO Trader Live, it's going to be more challenging on the housing market. It might slow the housing market down quite a bit. So, interesting there to wonder how that, because these can have their own individual issues, these trusts, depending on what part of the country they're in, and what real estate they're owning, and all these kind of things that play into it can vary. It doesn't necessarily mean it's a testament to the entire sector of real estate, but it makes you wonder a little bit. It's a good talking point. And then looking through the rest of the signals, this IBP, notice that it's a building products company. So we got a real estate trust and a building products company with the two highest scores on the bearish side that occurred on Thursday. So pretty interesting between the two there. If we take a look at the options on this, and obviously we wouldn't want to do January, so we go to March. Now you can see what the problem was with this one. Looking at the open interest, there really isn't any. So almost impossible to trade that because there's no open interest. Just a further commentary on options. The fact that there's low open interest doesn't guarantee that you wouldn't do a trade. What you need to know is if there's little to no open interest, you'll be trading with the market maker because they have to take the other side of the trade. That's part of their deal. But they're not going to split the spread with you. You're going to be buying at the ask and selling at the bid. They're not going to play any sort of in between. You can split the spread quite often, as you've noticed, when you have good liquidity in an option because there's lots of people trading it. But if you're going directly against the market makers, and then they have the timing risk of hedging the position off because they don't want to hold a directional position, they hedge it off. Well, if there's low open interest, they're going to have the same problem. They're going to have to find some other institution that wants to take the other side, and so you pay the spread. Basically, you buy at the ask and you sell at the bid. And so when we're looking at these options, and if I switch over here to Delta, you can see, okay, here's the 33 delta, 37, either one of those would work, but we got $8 by 11.50, so that's a $3.50 spread, or 960 by 13.50, that's almost a $4 spread. So yeah, we're not going to do that. So that takes that out of the equation as well. But interesting that two of them builders right off the bat, and then just to keep things in the same vein, we go to MTH, which is Meritage Homes. So this is a home builder. The score is interesting, certainly, and a little bit of a bounce today. And I've traded this before. I look at the options. I do feel like perhaps there's a little more open interest here, perhaps not. Well, there is a little bit, but the spreads are still wide. 870 by 1030 with 87 contracts. Yeah, that's not really going to be anything we would be interested in. As you move over to the call side, you can see open interest is low here as well. There has been a time when there was good open interest in Meritage, but not so much now. As you can see, there's a smattering of open interest on the January options. But that's three now, three in a row. Bam, 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 all in the real estate or housing sector, which I think will be something to watch. And if rates continue to tick up, I think there could be some good bearish trades in the housing area. And I would look for more of those as we move through. And then if we go back one more day, look at that list on the bearish side of things. Several potential candidates there. Suncor Energy had gotten just too close. I mean, it was just, there was less than $1 movement there as well, even though it was one of the higher scores. 74 is the highest score I've seen on the bearish side so far. We've done them at 70 or above, but there just wasn't enough movement left, and it, was low dollar, so it was less than $1 movement. And at this point in time, it just doesn't make any sense, even though the score was pretty enticing. So many things to take into account, but you see how it just goes down, 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 down. And when these go to the downside, they can just really take a move and run. Now, UNP, we did do because we had enough room there to the downside. And a little bit of sideways movement so far today. Started down, recovered a little bit, but we're below the 10-day moving average. So I think this one, I like this one. I think it's going to play out pretty well. Just a little bit of perhaps an oversold bounce occurring. Maybe it kind of stays status quo throughout the rest of the week before the volume comes back in January. We'll see how that works out. But then if we start to go to, this is where it really gets interesting, to the sideways stuff, and we look at the same date on these, you can see that the highest score was 26, and that's so far it's going okay, but that lends you to believe that's almost in an area where what I've been working on these really low scores. And there's an example of what I'm talking about here, RGTI, where you have a very low score, and the likelihood is that it's going to break out. Rather than, because it's the same thing when you're fading it, you're going the opposite way. So when you have a very low score on whether you're looking at sideways, bullish, or bearish, to have a really low score, you consider doing the opposite. So if this is a sideways calculation, but a very low score, 3%, they're saying the likelihood is this is going to break out. And it did. You can see that movement there to the upside that's occurring in today's market. All these things that we will be putting into play in 2025 that have been going through and analyzing and tracking, et cetera. So just really can't stress enough about how excited I am for the coming year. And then we look at NVO. here. This one is one that's a little more difficult because the score is 67, so it's not high enough um, to put on a sideways trade, and it's not low enough to fade. Just nothing really to look at there. And then if we go back uh, to the 18th, you can see there's nothing, none at all. And same thing on the 17th. So I think all this is going to change when the volatility picks up and we start to get early earnings in January. I think we're going to see a lot more of the time strategy trades. In the meantime, I think where the action's going to be is in the AI impulse portfolio and the volatility portfolio, and that's why the level 3 is so important, is so that when one of those portfolios is having fewer alerts, usually one of the other ones is picking up the pace. We noticed that when the volatility portfolio was getting quiet, we were getting a whole lot more impulse signals, and that's kind of where we are. There's not a whole lot to talk about on the AI right now. So the tease that I gave was what might the AI be telling us as far as whether or not we're going to get the Santa Claus rally or not. I don't think it's really giving us much of an idea. Certainly nothing too exciting on the bullish side. And then on the bearish side, not quite high enough, but still a little bit of a lean on the negative side. We'll see how that plays out and moves out towards the end of the year if we get the Santa Claus melt up or not. So let's go back and look at the S&P. Zach will take any questions if anybody may have. And not, we wish everybody happiest of holiday seasons. So we are up at the high of the day at the moment. So Zach, leave it to you if there's any questions.
Very well. Thanks, Rob. No outstanding questions at this time. And I see we just had a hand come up there. We unfortunately don't have time for voice questions in this session. If you want to drop a question in real quick in the chat or Q&A, I'm happy to pass it through. But other than that, we don't have any outstanding at the moment. And just want to take the time to thank you all for your attendance and interaction this year. It's something we don't take lightly. And we are looking forward to an exciting 2025. Jim came through and said, would like a review on Amazon.
Okay, Jim, I'm going to take a look at Amazon real quick. Certainly a timely stock this time of the year and a good bellwether for what's going on in the retail side of things. So far, status quo. I think we'll start to hear some data. We got some decent news. I think maybe better than feared is a way to put it after Black Friday. And now that we're moving into more of the holiday season, there have been in the channel checks that I've done, and just this is what happens when you become a trader in your life. Everywhere I go, whether I'm going to a store, to a restaurant, anywhere I'm going in the public, I'm always asking people how's business and how does it compare to last year, year before. You just get in a habit of doing that because you're always wanting to get a feel for the pulse of what's going on. And there have been some retail outlets that said they didn't have to hire as many part-time people this year because business hasn't been that strong. It remains to be seen if that's just a brick and mortar issue or if that moves into the online as well. So far, Amazon has performed pretty darn well. They're branching out, they're getting into everything. They're not just a big retailer anymore. They're doing a lot of other things. Nicely holding the 10-day moving average here, which I think is pretty impressive. If you're long, to wrap this up, if you're long Amazon, I would stay long as we stayed above this A-wave impulse. We kind of tested that on the low on Friday and bounced back. And if we could break above this 230 level, then we could be off to running. And I think 250 is really in play there, at least that 161.8% extension just underneath it. So looks good right now, staying at that 10-day moving average. But once again, your stop is down here at the A wave impulse if you want to trade this one long into the end of the year. Zach, I want to thank you for all the behind the scenes stuff that you do. People aren't aware. I know they enjoy interacting with you, but how many hats you have to wear back there, especially now that Zoom has changed things and you have to basically okay it anytime somebody wants to change the screen, et cetera, and pay attention to everything that's going on. Thank you for everything throughout the year. Wish you happy holidays. Wish everyone that's watching a very happy holiday season. Watch for commentary as we go through the end of the year before we start coming back to these live events at the beginning of next year. And as I said in the Evo show, I literally can't wait, especially for these AI signals, the taste that we've gotten on the bearish signals. We will get a 10% correction again, and I just think it's going to be an absolute blast. I'm looking forward to amazing things in the coming year. And if you have anyone that you think might be interested in those AI signals, I would encourage you to let them know sooner rather than later. I mentioned that in the US market update, and a lot of people reached out. The AI data scientists have their number in mind, and once we reach it, it will be shut off. It's just basic thought process that if everybody's doing the same thing, it isn't going to work. So they don't want to have an inordinate number of people getting these exact same signals. So once again, thanks everybody. Have a great holiday season and really look forward to seeing you in 2025. Take care, everyone.